Good afternoon, everyone, and thank you for attending this afternoon webinar where we'll be looking at AuditAdvanced Mercia for the company audit template, version 20.0.04. To see us through to this afternoon, we've got a few presenters to help us out with content. Now, first of all, we've got Andrew Paul from Mercia who's joining us today, and he's very graciously offered to go through a methodology update and explain the changes on a high level for ISO 540 and ISO 570. We've also got Jonathan Millar. Jonathan is our product manager, and he's responsible for the whole AuditAdvanced suite. And he's joined by his colleague Adam as well, who Adam's going to run through the roadmap for you to let you know what's coming in AuditAdvanced and so on. Now, I'm here today with my colleague actually in the background, Tom, and we're here to really help you with your questions. Any questions you feel you want to ask today, we have got a Q&A session at the end, and Jonathan will tell you more about that in a moment. But for the time being, if you have got a question, in your GoToWebinar app, you can go through and raise a question. Now, please send them across to us. We'd be very happy to answer them live in the webinar at the end in the designated session. There is a hand raising option. We will keep an eye on it, but if you have got any questions, please use the question field. If you'd like to ask the question live, send us over a question, let me know, and we'll see if we can get you connected at the end to ask Andrew or Jonathan a live question. Now, the answers to the Q&A and along with the recording of the webinar will be made available on the CaseWare knowledge base probably early next week for your perusal, or if you want to make it available to any of your colleagues should you find it interesting. Okay, right, so without further ado then, I'm going to hand you over to Jonathan. So Jonathan, would you like to unmute yourself and show?
Here I am.
Excellent. And I was going to make you presenter now as well. So you should get the notification pop up on your screen. Let me know if there's any problems with that coming through.
There we go. Thank you very much.
No trouble at all. And yeah, you can see.
Thanks a lot, Tony. So thanks, Tony, and thank you everyone for joining us this afternoon. We're very aware, of course, that this update is extremely important to you all. As if to emphasize that to us, you seem to be here in record numbers today. So thank you for joining us. And also thank you for your understanding as we've been trying to get this release out to you. I know it causes a number of logistical issues for you all. Unfortunately, we haven't just been able to push it over the line today. I can only apologise to you for that. What we do have to ensure and let the QA team carry out their final regression testing in the right way, and you'd expect us to do that. But I'm being told by them that it should be with you very early next week. So we have provided you with some extra resources to deal with this update. And we'll show those a bit later on as well. Also, one explanation, we did hit a snag with disclosure checklists. Now, potentially that would have delayed the release even further. So we've taken the view there that these updates need to be released, and they can be released in a later common components, which will accompany the LLP release in January time. And we know that's not ideal, but we've done it on the basis that we know you want this update. You need it for your year-end planning and roll forward, and perhaps those disclosure checklist elements which are relevant are only likely to be needed a bit later on in the audit process, and so they will be able to be out to you in due course. We have actually, just to plug the cloud checklist, we have actually managed to update the cloud checklist product and also actually the cloud audit product for these changes. Those have been available for a couple of weeks. It's just that the cloud is a far more agile environment than the hybrid is. We've got a lot less legacy to work with as well when we're looking at regression testing. So, but we have been working hard to get this to you. And so with that little preamble, we'll go and have a look at the agenda for today. I'm very pleased to say we have Andrew Paul with us from Mercia. He's going to go through in a few moments the technical elements of this update, what it means for you, and things you need to look out for, and also perhaps what else is on the horizon over this next coming year. And then we'll have a look at how all this has been incorporated into the template, how we've interpreted what Mercia has provided us, and we've been able to put that into our template over these last few weeks. Then we'll have a look at some of the issues that you'll need to look at with this update. That's part of that demonstration as well. And then at the end, Adam will give a brief look at the roadmap for the next few months. So you've got an idea of the next time the updates are coming out. And then after that, it'll be time for some questions. And so with that, I think I'll hand over to Andrew now. Hopefully the wizard in the background will move us across and share screens a different way. There we go.
That should be popping up in your end now, Andrew.
Yeah, there we go.
Okay, thank you.
Super, thanks, Jonathan. And yeah, thank you for the introduction. It's good to see everybody. Just to introduce myself, for those of you that don't know me, my name's Andrew. I work for Mercia. I'm part of the Audit and Accounts technical team at Mercia, and I'm heavily involved with our methodology writing team, but my main role is to be the link person between our paper-based methodology. It's not been paper for years, but the word-based methodology that we create, and then channeling that through to our paperless partners. So I work really closely with Jonathan and with Matt on the cloud version as well. So my role this afternoon is just to talk you through, as I suppose Jonathan and Tony said, a very high-level chat through what this update is all about, what the changes to 540 and 570 mean for you. This is not a 3-hour audit CPD course, you'll be glad to hear. This is going to be a sort of 20-minute, very high-level chops through what the key things are. There is some great material out there that you can also get your hands on to see exactly sort of the nitty-gritty of the 540 and 570 updates that are kicking around. I know some of you will be members of the audit faculty, the ICAW, for example, and there's a great article in Audit and Beyond at the moment around 540. There's been a lot of stuff, John Selwood's put a lot of stuff out around 570 as well. So there's plenty of material out there, and there's no way I can get through all of that in my sort of 20-minute slot here. So just going to give a very quick sort of headlines and then explain sort of what we have done with the methodology, and then Jonathan will explain a bit later on how that's then translated into CaseWare and what the new forms will look like within the CaseWare platform. So a little bit on going concern first of all, and the methodology, a little bit on accounting estimates and the methodology, and then as Jonathan just said, a bit of a heads up on sort of what's happening a bit further down the line. So we'll have a quick chat through ISA 315 and some of the things that are already on the drafting board at our end. So having got these ones out the door, we're now already sitting there thinking, well, next thing coming down the line, how we're going to deal with ISA 315. So just a quick sort of heads up on that one as well. So starting off with going concern, so do 570 first of all, and going concern. Key point I've been making to lots and lots of people over the last 3 or 4 months when we talk about ISA 570 is this has been something that has been in the pipeline for a long time now. When I say a long time, since back end of last year, we've known about the changes to ISA 570. This is not a response to what's happened during the last 9 months. However, I would hope that most clients are a lot more aware of going concern than they would have been previously. I think going concern is definitely something that we've got higher up on our agenda. So it's maybe fortuitous that 570's come on at the same time, but there's no cause and effect in this. We're not talking about this is because of what's happened in the last few months that this was already coming down the line. And the background to lots of this was some of the higher profile business failures that we've had in the last sort of 3 or 4 years, and a requirement or a need within the sector to say, look, we need to maybe to tighten up slightly on our audit procedures. The comment that lots of people are sort of saying at the moment is, well, if we were doing this properly already, does 570 make a massive difference? Well, yes, it does. It's very easy to say, well, I was doing this well already. I'm not going to worry about 570 particularly. That does slightly miss the point of some of the things that ISA 570 is requiring us to do. So I've just sort of got a few key words here on the slides. But you can see, if you've got good eyesight and you can sort of squint into the left-hand corner there, this was published back in September 2019. So this is something that has been around for a little while. Implementation periods commencing on or after 15th December 2019, so December 2020 year end in essence is where we're looking at here, hence the timing of this. But the whole idea is to try and get people thinking in a more robust fashion about going concern. And those of us who have been around in the profession for a few years, the last time we had a big kind of concerted effort around going concern was probably 2007, 2008, during the last financial crisis. We had lots of documentation, again, published by the FRC back at that stage, reminding us how important going concern was. We're now sort of 10, 12 years down the line. It was kind of going to be inevitable that over time we sort of don't get quite so excited about going concern. We sort of think about going concern as another thing we look at. But the FRC is saying, look, come on, this is a really important issue. This is something you really need to make sure that you're nailing down. So this more challenging mindset, trying to be more transparent, so some slight tweaks to the audit reporting around going concern as well, making it clearer to the investors and the users of the accounts what we actually do as part of the audit process. Enhancing documentation, so back to the old story that we often hear with audit, it's not just what's up here, it's what appears on the audit file. So encouraging more documentation, clearer documentation on the audit file, which is where firms who say, well, I've done this really well for the last few years, there are some new documentation requirements to think about in here. And also there is a little bit of getting the ISA ready for what else is coming down the line. So you're going to see a few things that we mentioned as part of 570, which also then come into 540, which also then you'll see more about in 315 and the other standards coming down the line as well. So there's also a bit of housekeeping, if you will, that's underplaying it slightly, but a bit of tidying up and a bit of streamlining to make the ISA fit in with everything else that's coming down the line as well. But the important point to really make out of all of this is the robust communication point that's at the bottom there, making sure that going concern is something that's thought about all the way through the audit process. It's not just something that's dealt with at the end, it's part of completion, we'll do that, and oh crumbs, we're rushing to get the job out the door type thing. It's something we should be thinking about all the way through the audit process and making sure that it is appropriately considered all the way through. So one of the things you're going to see in the documentation is an increased focus on what is the client's system, what is the entity's system around assessing going concern. Now, for some of your clients, they will have big finance departments and we have a very formal budgeting process and forecasting, etc. Absolutely great. Some of your clients will have smaller finance teams, and therefore it becomes a little bit more of a, oh, well, we think it's okay, gut instinct type thing. The ISA is trying to say, look, we need to be more formal in how the client is generating this information. We need to ask the client the right questions. How do you know that you're going concern? How do you consider your risks? How do you consider how significant they are? How do you address those risks within your business? How do you know if things are starting to go off plan? What are your information system triggers to tell you, actually, this isn't quite what we thought was going to happen? And as I said at the beginning, I think by complete accident, clearly, but I think this year, lots more of our clients, lots more of our corporate clients are more acutely aware now of going concern than they have probably ever been, certainly for the last sort of 7, 8, 9 years or so. And even back in the last recession, you probably had some clients who were sort of, yeah, we'll be okay, things will tick along, you know, we've got enough money in the bank, it's not a particular issue. But even those clients who thought they were fairly robust in the last, say, 8, 9 months will have had experiences which they never thought were going to come down the line at them, and it's now challenging them a bit more to think about going concern. So understanding how does the client assess going concern, that is one of the key things to coming through from the standard. And a requirement to say, well, if at the planning stage you ask the client, how have you assessed your going concern status? And if they haven't, we haven't done that, is a pushback to say, well, in that case, you need to do it, please. So a much more sort of direct, well, rather than us saying, well, we know the client's okay, they've got loads of money in the bank type thing, it's a, well, how do you, Mr. Client, Mrs. Client, Board of Directors, how do you know that you're going concern? What is your information you can give us around your going concern assessment? Things that then pop into the standard, which I hope you'd still think, well, this is fairly obvious stuff, but again, things to flag up. Being aware of management bias. So consideration, and as part of risk assessment in general, we've always been thinking about management bias, hopefully, but again, a much more direct comment around going concern and management bias. You know, are management more or less likely to be erring one way than the other? So consideration of management bias. And as I said, this required to keep thinking about going concern all the way through the audit assignment. And I would liken it to similar to things like your AML considerations and your related party considerations. It's something that at the beginning, we understand at the start point, it's then in our head, and when we're doing all of our audit procedures, our fieldwork procedures, etc., we're constantly thinking, well, is anything that we're seeing potentially going to cause a going concern problem? So are there any issues there? And then at the end of the assignment, we will then step back and take a fresh look at it and say, right, okay, based on the evidence, do we think we've arrived at an appropriate conclusion? And you'll see in a moment how we've tried to change the methodology slightly to encourage that more regular considerations throughout the assignment, rather than it just being a bit of a wham bam at the end of the audit that we look at. So I'll show you how that change in methodology works at the end. Say, asking management to reperform their assessment if things then come to light. So you're partly through the audit assignment, you've noticed something that you think is causing a going concern. You then discuss that with the client, then ask them, well, what do you think this will mean? Do you need to revisit your going concern assessment? So this constant dialogue during the course of the assignment, not just a quick chat at the beginning, quick chat at the end, it's this constant interaction in there as well. And consideration, of course, of is there extra work we should then be doing? If we find one thing that the client hasn't thought about, does that trigger more work that we should be carrying out as well? So the linkage of the risks through to the audit work, but then the consideration of additional audit work as we go through the assignment. And then at the end of the assignment, we have this stand back procedure. And again, you're going to hear a lot more about this. You can hear at least twice more in the next 10 to 15 minutes. Standing back at the end of the job, okay, we've thought about it at planning stage. We have looked at it during the fieldwork stage. At the end, do we think that we can meet, or come to the same point, sorry, agree with the client's consideration? The client said they're going concern. Do we think we've arrived at the same conclusion there? But notice again that the key words there, considering both corroborative and contradictory evidence. So you're not just looking at the things that support our point of view or support the client's point of view, but having that robust assessment of the evidence at the end. Here's the pros, here's the cons. Do we think that we have arrived at an appropriate conclusion? So you might say, well, I do that anyway. Well, yes, but hopefully it'll be a different thought process if you're thinking about it much more at planning stage, much more at fieldwork stage. Then at the completion stage, it becomes more of a, does everything stack up? Okay, so that's kind of where we're going with 570. That's a very sort of very, very brief run through what 570 is trying to get us to think about. So how have we changed the methodology in order to facilitate those additional requirements from 570? Well, first of all, you're going to see there are new requirements in sort of the permanent file documentation stage. Now, clearly, within CaseWare, it is a set of documentation that we still call them permanent file documents, not a separate file, as we all know. But we have those initial understandings, those understandings that will probably be fairly constant for a period of time over the years. So we have a new PF1 10 document, which is capturing the recurring knowledge on going concern. We've then revised the B31 document at the planning stage, which was always there. So there was always a planning stage going concern document, but that was very much focused on our thought processes, much on us, what do we think might be the issues. That V31 has now been sort of changed to be much more focused about, well, what has the client given us? And then we need to be robustly considering what the client's procedures are. Have we got sufficient information? What does that mean we should be doing as far as fieldwork is concerned? And then the big change is that we now have a separate going concern work program. So we now have an R section going concern work program. So we've taken the big bit of work that was on the A42 previously, so the big going concern documentation at A42, and moved that into the fieldwork section. So now it's a separate R section on its own. You can obviously link to that much more easily, and you can flag risks, etc., through to that. And Jonathan will talk about that a bit more later on. But we've now got this separate section, which is partly just moving some of the procedures into a different part of the file, but is there to try and promote that idea that this is a fieldwork thing to be considering on an ongoing basis. This is not something we just leave until completion and then sort of rush through it at the end. So you may well recognise some of the tests and some of the procedures as being similar to what was on the old A42, but the emphasis moving them back into the R section, just trying to give them that slightly higher profile by putting them in their own audit section. And then finally, A42 is still there as a reference, but it's a very different document now. It's not saying go and do the work. It's now much more the stand back provision, trying to encourage us to take stock of what we've got, and do we arrive at a conclusion which either agrees with what the client thinks or disagrees, and therefore we have reporting considerations to think about. So that's how we've dealt with the 540 update. So Jonathan will be showing us how that flows through in CaseWare a little bit later on. Now accounting estimates, and this is the one that people are getting very excited about, and so there's lots of commentary out there around this one. You're going to see some similar words here, to be honest. You're going to see stand back, you're going to see this more robust discussion, etc., in here as well. The thing to remember about ISO 570 is that's pretty much a UK-based update. The FRC decided that we needed a bit more guidance coming through on that one. ISO 540, this is coming down from the international board, so the IAASB have revised this internationally. This is then flushed through into UK, the UK approach as well. So this is part of the update to the ISO suite that, again, I'll refer to a bit on 315 in a minute. So this is a taste of things to come to a certain extent. And why have they bothered changing it? What was the issue with accounting estimates? Scalability particularly. So they wanted to make the ISO a little bit more sort of fit for purpose as far as different sizes of entity was concerned. So a bit more scalability as far as sort of big complicated estimates and smaller, simpler estimates. So trying to get some scalability in there. Some changes were just driven by IFRS, particularly sort of financial instruments and leases changes that they've driven a few needs to change the auditing standard. I won't bore you to death with those ones, particularly this afternoon. And then again, trying to say future-proof the standard because of the other things that we know are coming along, the bigger picture of updating the standards over a period of time. So again, I'm just going to run through some very headline comments on this. So please do spend some time looking at more detail. I'm sure some of you have had this mentioned to you on CPD courses already, and so if you've read the articles in Audit and Beyond, etc., then hopefully you've got a bit of background. This is just a very, very heads up, high level summary of this. But one of the things you're going to notice is the introduction of what's called the spectrum of risk, and you're going to hear a lot more about this as the other standards walk through over the next few years. So trying to sort of make us think about inherent risk, but not just in the traditional low, medium and high sort of context, but thinking about risk being on a spectrum, and hence why it gives me a good excuse to use coloured pencils on a diagram. But where are we on a spectrum of risk? Where is this risk? Is this at the bottom end? Rather than having this sort of very distinct low, medium, high, do we have very, very few risks, very sort of minimal risk here? Is it actually a much bigger issue? And trying to give us scalability and this spectrum based on things like complexity, the subjectivity involved, the uncertainty around the estimate, management bias, fraud, all these things flowing into our consideration of what might be or how we might assess the risk. Now, you'll see in the documentation that as far as the spectrum of risk is concerned, we've tried to move away from the low, medium and high. As far as estimates are concerned, we've actually gone to a scale of 1 to 5. There is a massive amount of debate out there as to what a spectrum of risk might actually look like. The ISO doesn't prescribe what the spectrum actually is, just says on a spectrum, where does the risk sit? So we've come with a spectrum of 1 to 5. I know some people out there sort of looking at spectrums of 1 to 100, 1 to 9, 1 to whatever. Lots of different views out there. We've plumped with 1 to 5 for the time being. I'm not promising that's where it's going to sit forever. The spectrum, as we look at the other stuff that comes through, we may decide to tweak that spectrum slightly, but that's a start of a 10, if you will, and start of a 5. Is where we are at the moment, so you can see that flowing through. Other things then that we need to think about: entity and environment at the permanent file stage, the understanding the client stage, understanding where estimates might be required and what the risks are that relate to them. So rather than just saying, well, what estimates has the client got in the accounts, well, where might those estimates be? So taking that one step further back and consider, well, where might the client have estimates, and think about the risks rather than just saying, here's the estimates the client has got, let's audit what's in front of us. So trying to be a bit more pragmatic in our risk assessment process. And then we've got the other sort of big change is about thinking that not just looking at the inherent risk associated with these items, but also the control risk as well. So bringing the extra dimension to accounting estimates and not just saying, well, it's a high, medium, low risk estimate inherently, but also what are the control risks associated with that. There will be concerns, of course, because you might say, well, I don't do controls testing. I don't do a controls test, therefore, how am I going to assess the risk? Well, the basic answer to that question is if you're not testing the controls, how can you get reliance on controls if you're not testing them? Therefore, your control risk may always be deemed to be high because I'm not testing them. I don't know how good the controls are. I know in theory what they look like, but in practice, I don't know if they actually work, if they're good or not. So therefore, yeah, we may end up with a high control risk. Now, that may not have a massive impact on exactly how you decide to approach the substantive work, but it's certainly more documentation and directional to say, well, look, we're not just saying, oh, the client's really good and knows what's going on here. Let's say it's low control risk. We've got to actually test it and think about it and assess it like we would with anything else. So control risk is part of the mix in here as well. And so the comments I put there, if you're going to say control risks are good, you've got to, or are low, you've got to test them. You can't just say, I thought, in my experience, this is a good control environment. You have to test it. You have to show the evidence of how you got that. Other things to think about. How did management arrive at their estimate? So understanding how management got to this, and this has always been something we should have been thinking about, but maybe a bit more focus on how we're going to deal with this. Testing the method that they've used, testing the assumptions they have used, testing the data that are fed into that calculation. Not to say, oh, the client's the expert in this, tick, that must be okay, but really drilling down, testing those things in some detail. And making sure that when we are assessing risk, documenting really clearly how we are going to respond to that risk. When we've got an accounting estimate, we think it's an important accounting estimate. How are we going to audit it? Not to say, oh, well, we'll use normal procedures, but are we going to look at post-year end? Did the estimate actually come to fruition correctly? Are we going to do the testing the method, testing the assumptions, testing the data I just talked about? Are we going to develop our own estimate, our own point estimate, our own range estimate in order to then confirm what the client had is reasonable? Proof and total analytical review type thing. So how are we going to test it? Being very, very clear on the file how we're going to test it. So you're going to see again in the documentation that there are specific boxes that we have to say, yes, this is how we're testing that estimate, not just, oh, it'll be covered by our normal testing type thing. Being much more directive about how we're going to be documenting these points. Bringing more professional skepticism into the mix as well. Won't get onto my little bugbears about the fact they spelled it with a K rather than the C, but hey ho. But the degree of the inherent risk or management bias, etc., being skeptical, not just sort of saying, oh, well, the client knows it all really well, it must be okay, but really probing that, looking at past performance and the data, etc., to know whether it's a reasonable estimate basis. So really, really sort of upping the ante on the skepticism a little bit. And then that stand back provision comes in again. So at the end of the process, standing back, here's what we thought about at the risk assessment stage, here's what we plan to do, here's the evidence we've gathered. At the end of the job, do we think that there's enough sufficient appropriate audit evidence to support the figure that's in the accounts? And that's standing back at the end, taking that deep breath and saying, yeah, we think this is okay. Yes, we think this is a reasonable approach. There's also some change to disclosures. So there is a requirement to make sure that where disclosures are being made around accounting estimates, that we are auditing those. And again, you should always be doing this if you, to be honest, but just a very, very specific point around, you should be checking where they're talking about estimates. Is that disclosure appropriate? Are the disclosures around estimates appropriate and detailed enough, etc.? So again, how have we dealt with that in the methodology? How's that going to flow through the methodology? Well, the approach we've taken, and again, this will sort of feed into CaseWare in the same sort of way, in slightly different ways as far as the actual references and forms are concerned, but the workflow that we're looking at is the PF1. That's always been there. We've always had that background accounting estimates document. That's now been slimmed down slightly. You think, wow, change the standard, they're slimming something down slightly. But the reason we're slimming that down is because that PF1 document now just becomes the background. Here's the estimates we think the client might have. Here's the estimates we know the client has got. And it's purely capturing that knowledge of estimates. Nothing there about how we're going to approach the audit, nothing there about the work we're going to do. The PF document is purely about capturing the information. That will then link into a planning stage document for each estimate that we think is a significant estimate. And it's down to you to make that judgment whether you think it's significant or not. But for each estimate you think is significant, you will then create a separate planning document for each of those. And again, Jonathan will explain how that works within the software a bit later on. So it won't just be one form. We say, oh, here's how we're going to do estimates. You'll have a separate form for your, I don't know, your stock provision estimate or your whatever other estimates you happen to have sort of lurking around within your business. You'll have a separate form for each one. That will then drive you into a planning approach for that estimate, which will then drive you into an audit program for that estimate. So you're going to have a very sort of direct approach. Here's the estimate. You'll drop out of your PF1. You've thought about it, right? Here's the estimate. Here's a form for that estimate. Here's how we're going to approach it. Here's the audit work that goes with it. So it's a nice, clear approach that you're going to see sort of flowing through there. So another new sort of audit section, the Q section, which is where your accounting estimates work is going to sit. Clearly, there might be some overlap there with other audit areas. So you might say, well, I do some of this stock provision work in the stock section. Well, yes, that then comes down to you to decide, do we record the work in the stock section and cross-reference the Q section to the stock section, or do we put it in the Q section and cross-reference some of the stock work to the Q section? That's down to you to make that judgment where you think the work actually sits, where do the work papers sit. But again, from a directional workflow point of view, a separate Q section felt like the right thing to do to make it clear how important this area was. And then finally, a new A44 document for conclusions. To pull it all together again, that is your stand back provision. So you can see again that flowing through shortly. Okay, so 2 more minutes then just on where things are going in the next sort of 12 to 18 months or so. And ISO 315 is the big thing that is now sort of on our agenda. There's a couple of other things going on as well, but the big one coming down the line is the ISO 315 changes. As I say, we are already working on those. We're already thinking about how that's going to flow through the methodology. so that we can start to release that information through to CaseWare, and they can start to build that into the templates early doors. A couple of things to think about here. Why are they changing ISO 315? What are the changes that are going to be coming through? Again, it's time for a bit of an update. It's been a while since we've had the last big change to the auditing standards. So again, scalability comes in there, but they use the phrase reducing complexity. They reduce complexity by making the standard bigger, but we won't go into the semantics of that particularly, but trying to make it more usable for auditors of all entities, regardless of the nature or complexity. So trying to make it a more one-size-fits-all type standard. Starting to think about some of the IT aspects as well, so data analytics, nods to those things will be coming through in 315 as well. You saw on the accounting estimates that comment about thinking about inherent risk and subjectivity, complexity, uncertainty, management bias and fraud. That you're going to see coming through a lot more as well. Inherent risk assessment will change to build in all of those factors when we get into 315 territory as well. So the 540 is just a taste of things to come, really. The spectrum of risk will appear again in more places. There'll be more around standback, more around inherent and control risk and the separate assessments of those things rather than sort of bolting them together too closely. So all the sort of things we started to talk about in 540, you're going to see flowing through from 315 and therefore hitting other audit areas as time goes along. So it is a time to embrace the changes of 540, embrace what's happened with the methodology, because you are going to see more of the same coming down the line over the next, say, 12 to 18 months or so. So just a little heads up around that one. So that's it for me from the techie point of view. I will then pass back over to Jonathan and Adam to talk us through actually how it looks within the software. So guys, back over to you.
Okay, thank you very much, Andrew, for that update. That was very interesting. So I think what we'll do now is obviously the real main issue I think for most people will be how we're going to work out these accounting estimates and what's the documentation looking like for that. So what I've done is I've put a little video together for that, which Anthony should be able to run now, and that'll help hopefully then be able to put us in a good position to be able to see how we've interpreted what we've got from Mercia into our actual working paper file itself.
Okay, Jonathan, let's find a second. I'll just get that loaded up.
Okay, well, I mean, the update itself has given us a few technical issues, without a doubt. It's caused us difficulties, but hopefully we've got it through and we'll be able to see it now. Okay,
I'm just going to start playing the video. Hopefully everyone's seen a webcam just load up. Well, you're saying ISO 540 MP4. I was going to press play now. If anyone's got any issues with sound or connection, please let me know. Also, if there are any problems with connection, you do lose audio or visuals, everything will be available in the knowledge base later for you to be able to re-access. Okay, so no panic, it will be made available again. Okay, so let's press.
We have incorporated the changes to Mercia's audit manual methodology in respect of accounting estimates arising out of the revision of ISO 540. So this video is going to show you how we've adapted those changes within AuditAdvanced and how therefore the new documents should be used. So during the planning process, you'll naturally move through a review of the permanent section of the file, and eventually you'll come to PF18 for accounting estimate. Now, this document has been fully updated in this release, and it's now in a more discursive form. So any work that was recorded previously on a prior file, that would have to be copied in from that file into this one after the current years has been updated with these new documents. And so as you work through the documents, you then come to the section at the bottom where we are to identify these accounting estimates. And you've got the key accounting estimates and other accounting estimates. So we should record all the non-key accounting estimates here as well and provide justification why they're not key in the audit. But then, particularly for each key accounting estimate, we will need to create a set of documents that contain a planning assessment of the risks associated with that accounting estimate, and also a work program whereby we will then test those accounting estimates as part of the normal field work. Now, as there are an unknown number of key accounting estimates for any particular assignment, what we've done is we've created a V30 document, which is going to act as a control document from which we can then create and summarize the various estimates that we've identified. And so this B30 is a fairly simple document. There is some guidance here at the top which explains that we're going to use this form to create and automatically file the documentation for each of these key accounting estimates. We have a master document already in the template, and then we will create these documents from it. This is the, if you like, the technical challenge that we faced when doing this. And once created, those documents will appear as a link both in the table below here and also back on PF18. So if we simply click on this button, the first available key accounting estimates document will be created. So in this case it's B30QA. We've got 26 A through to Z available, and hopefully no one will need any more than that in any one audit. So we click on that and say yes, and we're asked for the document name, and perhaps we call this Depreciation Accounting Estimate. That then gives the name and the title of this document. You can always change this at a later date if you want, because that will now appear on the Document Manager. So this has been created back on PF18. We'll see here the details have come in. We fill out the key accounting estimate. That's its depreciation. And where's it going to affect? Tangible fixed assets. As you said, all that information feeds back to PF18 here. And it's also created the document now on the Document Manager. So if we just pop to the Document Manager and actually look under the Q section, we can see there's the B30QA Depreciation Accounting Estimate. So if you want to change the name, you can just change it in here. So we've filled in the name, we've filled in the details, and we've got that set up now. Now there's two stages to sign off on this B30 document that feeds back onto the dashboard to make that populated. There's two signatures here, prepared by and reviewed by. This is at the planning stage, so we do this at to show that the planning's been signed off. Come back to that warning in a moment, but if you look back to the actual dashboard now, we'll find that has signed off and the arches start to fill up, the dials start to fill up with completed work. And then also at the fieldwork stage, we've also got this B30 document there, and once that is signed off, if we go back to B30, if we sign that off at the third review, final review, that feeds back here as well. So you can see when things are being signed off and being completed. However, you did notice there are some warnings here because we haven't actually done the work on the documentation itself. And so if we signed off at final review, we would expect the work program element to be completed, And if we're signed off at reviewed by, we would expect the main B30 element to be completed. So we can open each document from here, from the table, and then go out and then complete the actual work for each of these accounting estimates. I'm just going to increase the visuality of this. This may mean that one or two of the boxes get slightly displaced on this view, but it's just for the purposes of this video. So here we got a document which is in two stages. We've got the B30 planning stage, which is again a largely discursive document covering all the basic requirements of the ISA. We can see that the information that we've already created, that this is depreciation, it's intangible fixed assets, they're already there. We can select perhaps the key assertions that are relevant to this accounting estimate at this time, and we just go out and fill this out as we go down, asking all the relevant elements which are required by the ISA. Towards the bottom, we are then also have a requirement to make an assessment of the inherent risk associated with this estimate, and the inherent risk is going to be on a scale of 1 to 5, and this is going to involve various amounts of factors, including the likelihood and potentially the magnitude of the misstatement. So you make a judgment on that basis, and then there's also a control risk element, and if we're not going to be it says there, if we're not going to contest the operating effectiveness of controls, then we should assess the control risk as being high. Then also have to assess whether this key accounting estimate poses a significant risk of material misstatement. If yes, then we should be raising a risk element, a risk for this. So we can actually do that directly here. You've also got the risk icon further up. This just launches the standard risk dialog. So if your risk that you've depreciation incorrectly calculated, obviously that might mean you've got a carrying value of assets too great in the working papers, and so you can identify the areas where this risk is going to take place, going to consider, and again with the assertions, you've got all the various options as usual, and you can also identify where you're going to address this risk, and it might well be, of course, in the tangible fixed assets section. And if you've actually already started your tailoring of the planning fixed assets form, you'll be given various options of your procedures that you can tag this risk to. So that all feeds out as normal. And if you have more than one risk, you can just scroll through here and you can create a new risk, or you can jump to any other risk that you've identified. So those will appear on the B32 when you come to them. So once that's done, you can sign off the document now at the prepared by and reviewed by stage. The prepared by, once you've signed off the prepared by, that then allows the queue, the work program if you like, to show on the screen, so that you as a preparer can now go through and start tailoring the work program itself. You don't have to wait for the reviewer to come along to sign that off. However, once you have got all your details, once the reviewer does sign off, that will then lock this planning side of the file, and in actual fact back on B30 you'll have a signature appear there, and you can actually at that stage also sign off your planning element of the B30. But we're going to go to the work program now, and we can see again that a lot of the information has now come through from the work we've already done on the key accounting estimate. So we've got the risk, the inherent risk, the control risk both here. You can also add further elements that have been identified. You've got your approach guidance there as well. So this tells us that this type of approach we will want to consider at least one of 3 ways of testing the accounting estimate. And you can also add further details regarding your risk. And then you'll make those choices of which type of approach you're going to look at, and you should choose one at least of these options. You can test more. So we'll perhaps test how management made the accounting estimate and develop our own point estimate. And by doing so, you'll get the standard documentation, standard procedures come up, which are Mercia's own procedures. They'll be available, but you can actually deselect any of those if you want, but then also you can add in your own procedures as well. So you'll do that, and then obviously when you come to the actual work that you're going to do during the field work, this is when these procedures get completed, and then you sign those off as you go through. You've also got documents attachments where you can put a reference in if you wish, and that's basically how the file will get completed. And once you've gone through and reviewed that, so this is at the end of the review stage, you then just sign off. That's all reviewed. Everything locks down. And if you go back to the B30 again now, you'll find out the queue is completed there, and you can sign and deed that off at the work done stage. And that's really it. So we can see now as we come here, that's all done. So we've got our planning completed, and our field work is also completed on the B30 for accounting estimates. Right, thanks for that. Hopefully that has given you an idea of how we've incorporated these changes. Obviously, this is the first iteration of these changes. So if you start using it and you've got some ideas as to things you'd like to see, then please feed them back to us through audit@caseware.co.uk, and we'll see what we can do with those changes. So what I think we'll do now, very quickly, we're running out a bit of time. We will have a quick look at the update process that we've got. I think, Adam, if you could, Anthony, if you could just make me presenter again.
No trouble, Jonathan. I'll just go through and do that now. You should get a notification.
Okay, so you should be able to see that now. Yeah. Okay. So what we've done is actually we've got a video prepared. We won't show that now because we just don't have the time at this point, but it will be up on the website in due course, as will a recording of this webinar. Because what we've done is provided you with a number of resources to help you through this to understand the impact of the changes that we've got. So when we received the update from Mercia back in November, we did send out an email detailing the impact of those changes on your engagement files. You can find that on our knowledge base under Article 4230. And on there, it lists down all these documents that have changed as a result of the 570 and ISA 540 changes. So obviously there were some significant changes to going concern, so some of those documents had to be replaced. We've got new work programs and the the video will show you where those need to be placed on the audit in the document manager as well. Of course, if you've got any queries on that, again, if you want to contact us, then feel free and we'll take you through it. We are aware that you need to be starting these updates, and this is trying to explain how in actual fact you can actually start the process of your roll forward prior to receiving this update, but it does explain where some work may need to be performed once you do it. Obviously, it's not the ideal situation. We always usually say just take the updates at the right time. We also provide a page with update information on each release. So this is KB article 3349. That's going to be updated for this 20.0.04 release. And there you'll be able to find on there the release notes, the interactive update guide, and the update notes for each of the specific releases. And we've also got a video which was recorded, again, can't show it now, but it's recorded there, which takes you through the main points of those update processes. And the main points to consider really are what do you do with your files which commence before 15th of December 2019? There's choices to be made there as to whether you update or not, so that will hopefully explain to you what happens there. It will show you also how to add the folders for this new documentation. So we've got new folders for Q, R and S, those work programs to be put into. It explains that, and then there's another one on removing the titles. So with that, I think what we'll do is pass straight to Adam, and he can just take us up on just briefly on where we're going ahead now with the roadmap over the next few months.
Thank you, Jonathan. Anthony, if I could be presenter, please.
Sorry, Adam, my machine's taking a few seconds longer than expected.
No, no, that's okay.
It's just coming through. It should be coming through to you now. We just had a little moment.
Okay, thank you.
Is that with you?
Yep.
There you go.
So
perfect.
Hopefully you can see my screen. So just briefly, just going over what we're going to hopefully send you over the next few months. So company audit, as Jonathan mentioned, will be with you next week. Then we're expecting 2 updates from Mercia, one for the LLP and one for charities. So we'll be working on those over the Christmas period and hopefully getting those ready for release in early January, and then one probably towards the end of January, early February for the charity. And then, so this is so looking a little bit further ahead. So at the end of November, you would have been notified about the release of the updated working papers, Working Papers 2020. And that will have an impact on our future release of version 22 of the audit system. So we're anticipating to get a pension schemes update, an updated audit procedures manual for the ethical standard, and an updated audit manual for the end of the Brexit transition period. All of those updates will be going into a version 22 of the template. And the importance of being updated of your working papers to 2020 is because version 22 will only be available on Working Papers 2020. So as we get closer to the time, we'll advise accordingly on that. And that's everything from me. So it's probably back to Jonathan.
Thank you, Adam. Lovely. So I suppose it's just the question now if there's any questions at this stage.
Hi, Jonathan. Yeah, we have had a couple of questions coming. So I'll just quickly go over those. We'll start with the first one that came in from John. My question here is whether we can perform one test of a control to justify low control risk as we do at present. Is that sufficient, or are we being pushed towards a more control-based audit approach? So it's probably
I think this one's for Andrew. I think this one's for Andrew, definitely. Yeah. And drop it on him.
Oh, okay, yeah. It's a very interesting question. You're not being pushed towards a more control-based audit per se. However, I would think that if you are going to place reliance on controls over estimates, then you need to be thinking about those specific controls over those specific estimates. So I would be surprised if one control test would give you sufficient evidence over every estimate that you were creating. So you might need separate control tests over separate estimates, would be my comments on that.
The B question section on every single audit program has been updated as well, hasn't it, to consider controls in respect of accounting estimates. So it's slightly more prominent now on those documents as well.
Absolutely. Yeah.
Perfect. Thank you very much, guys. One more question's coming. And the question reads, where that Mercia created some case studies for the paper manual, which gives examples of how these new documents should be completed. Are these going to be made available for guidance for Mercia CaseWare clients? So Jonathan and probably Andrew, both of you.
Well, as far as I'm concerned, yes, more than happy for those to be going on the knowledge base as well. So that's fine. Obviously, in the past, we've never really created a model audit file of any description within CaseWare in the past, but we're certainly happy to show or to share the examples of those documents. Just for context, a lot of you won't have seen them. What we did is created almost like a before and after sort of look at accounting estimates. So this is what you recorded in the current version of the documentation, and here's what it might look like in the new version, and you can see the extra amount of information that you would. Yes, happy to put those in the knowledge base.
Great. I think what we will do with that then is we will put that, say that video that you've just seen, which explains how ISO 540 has been interpreted in CaseWare Audit Manual, that we will put that alongside those on that same knowledge base article, and then everyone will know, where to go for the ISO 540 changes. That's great. Yeah. Thank you.
All right. In that case, then that's all the questions we've had in. I just want to take the opportunity to thank you, Andrew, and Jonathan, for taking part in the webinar and providing content. I do want to send a quick apology for anyone who didn't have a connection for audio or video on Jonathan's demonstration there of how to apply ISO 540 within CaseWare working papers. We will make sure that the MP4 recording is available on the knowledge base with all the additional guidance that Jonathan mentioned earlier as well. So that'll be ready for your approval next week. So again, feel free to send that on to any friends or colleagues. So thank you very much for everyone's attendance. Hope you all have a very good afternoon and a lovely weekend.
Thank you very much.
Thank you.